Hello, thank you for stopping in my video. I want to teach as many U.S. business owners, U.S. entrepreneurs, U.S. franchise owners, and 1099 income earners how you could save or stop paying federal and state income taxes legally with the Business Spendthrift Trust. It's legal. It's in the IRS Tax Code 643B. You're like, are you kidding me? It's legal. If your CPA or your financial advisor says, ooh, the IRS wrote a memo about this, yes, they did. On August 9th of 2013, the IRS wrote a 15-page memo. Tell your CPA or a financial advisor you want the whole thing. And on every page at the bottom, it says this is not tax information. They do not like the tax code 643B. They do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. It's their opinion. The worst vegetable in the world, in my opinion, are lima beans. You can't swallow them whole because they get stuck in your throat. You have to chew them. Yuck. So, the only Congress can change the tax code. It comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads to start the Church of England, he went to go tax the lords and ladies of England. They went back to the 12th century, the Magna Carta, and said, oh, no, King Henry VIII, you can't do this. It's contract law. It came to the colonies where we were still part of England. The law firm I work on behalf of inherited a trust that is going to turn 365 years old in 2026. Remember, the United States, happy birthday, on July 4th will turn 250 years old. Our current tax structure went into effect February of 1913. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, the Kennedys, made sure they could save taxes. Well, if they can save taxes, we can save taxes. Hi, my name is Sally Gimmon, and on April 4th of 2020, it's the middle of COVID, everything's shut down, my CPA called to say, congratulations, I made so much money in 2019, my tax bracket went from 22% to 24%, and all of a sudden I owed $94,000 in taxes. I told him I only had $50,000 saved. He's like, don't worry, Sally. Set up an appointment with me. We'll get you on a payment plan. You'll pay interest and penalties. I'm like, that's your solution. He's like, don't worry. We'll get it worked out. My solution was to research how the rich save taxes. It took me 5 months of research. In September of 2020, I started both my business and my Beneficial Spendthrift Trust. Also in September of 2020, I started teaching a mastermind in my Phoenix real estate group to teach other investors how to stop paying capital gains when you sell at a profit, how to stop paying interest income taxes if you're a passive investor, how to stop paying dividend income taxes if you're in the stock market, how to stop paying rental income taxes if you're a real estate investor, and how to stop royalty income taxes if you have talent or NFTs. That's the beneficial trust. Today we're talking about the business trust. The business trust is going to stop, and you're going to stop paying federal taxes in all 50 states, Puerto Rico, Guam, and also American Samoa. In 43 states, you'll stop paying state income taxes. I invite you to please set up a free 30-minute tax breakthrough session with me. It's a conversation on Zoom. I'm going to take you out to a free website called NerdWallet. I'm going to show you all the numbers. I'm going to send you an email with all the information so you can decide if this is correct for you or not. But today's example, back in April of 2025, I got a phone call. It was a planner, an event planner. She said one of our top speakers has canceled. If we could get you a flight to fly out to Las Vegas, I was living in Charlotte, from Charlotte to Las Vegas, and be here for just a day, can you take one of the breakout rooms? Okay, I'll take one of the breakout rooms. When I went in there, I was a national insurance company. I only had 4 people in the breakout room. From those 4 people who I spoke to, I have sold over quite a few trusts. So this was somebody who was in the breakout room. It was a wife, the husband and wife run a Utah Allstate group in Utah. And they gave me 2024 numbers. And what I've done is I've changed the numbers they gave me and made them 2026 savings. So in 2026, they're going to save, they are married. There's 4 ways to file your taxes. Single's the most expensive way. Head of household. You're divorced with children 18 or younger living with you. Married filing separately. And then the cheapest way, married filing jointly. Ladies and gentlemen, One thing you need to know on January 1st of 2025, quietly, the IRS changed married filing separately to match single from 10% all the way up to 35%. If you're married, please file jointly. You'll save double in the taxes just with that alone. So this couple, they run the office together. They file jointly. They're at 35% tax bracket. In 2026, for the whole year, they're going to save $128,288 in federal income taxes. Utah state income taxes, I believe, are 4.55%. I might be lying to you on that. I'm dyslexic, so I transpose numbers. But Utah state income taxes, they're going to save $24,342. For the full year, that's $152,630. So let's say they didn't start this trust until April of 2026. Per month in April, in May, in June, in July, and so on, every single month they would save $12,719 until we get the 2027 numbers. With all the different spendthrift trusts, the law firm I work on behalf of, Paul Benson, was a Harvard law professor. He wrote 5 separate trusts to save very specific taxes. You're not tax-free. All 5 trusts are spendthrift trusts. The 4 ways it's going to save you over and over and over again. You're going to stop paying federal and state income taxes, and you're going to leave a legacy. Who doesn't want to leave a legacy? It's going to keep your information completely private. No LLCs, S Corps, or C Corps. That's not private. It's public information. I can't stop you from being sued, but all lawsuits become frivolous and go away. And number 4, if you're on Medicare, 65 or older, and on Medicare and making too much money, this couple in Utah would be paying the IRMA surcharge. I believe he's 55 now and she's 54 because I talked to him last year. They don't have to worry about this for another 10 years. But the IRMA surcharge is when you make too much money, and it surcharge affects Part B and Part D of Medicare. So your doctor visits and your tests and your prescriptions. Every October of 2000, every October, the IRS goes back 2 years. So October of 2026, they're going to go back and look at 1040 tax returns of 2024. They're going to add, the supercomputers are going to add everything together. How much you're getting from residuals, how much you're getting from Social Security, how much you're making in wages, how much you're getting in pensions. Did you take a 401k withdrawal? Did you take a SEP withdrawal? Are you making capital gains taxes, interest income taxes, dividend income taxes, rental income taxes, and royalty income taxes if you have talent or NFTs? They add that all together. These are 2025 numbers because they haven't come out with 2026 yet. But if you're single and make more than $106,000 a year, you're paying the surcharge. If you are married, like this couple, and make more than $212,000 a year, which they are, they'd have to pay the surcharge on parts B and D. They don't have to worry about it. With all 5 spendthrift trusts, you're filing a 1041 tax return. And we're going to get you a new EIN number. We're going to get you a letter to go to the bank of your choice. You're going to set up a new bank account. You're going to tell all your clients, hey, you're going to pay this new bank account. They have 5 agents in the office who are all 1099 employees, but the receptionists, the cleaning crew, and everybody else, they're going to pay them out of this bank account. They're going to have access to the money in that bank account with their debit card, or they can go into the bank and get cash out. They're going to file a 1041 tax return, and the money they save, again, let me look back at this before I lie to you, the $12,719 per month, they can put this back into their business. They can pay off their mortgage. They can buy a new vehicle. They can take their family on a well-deserved vacation. They can set college funds for their children. They can give to their favorite charity, or they can save for retirement. It's their money to do with what they want. Now, a question people are going to have. When they get their 1099 statement from Allstate, it's going to have both his and her name on the 1099 income. They're going to turn that in with their for their 2027 taxes. They are both trustees on the trust. It's a very easy process. We introduce you to the CPA that we have vetted for you who knows how to file the 1041 tax return. Again, if you want to learn more, I have a free masterclass at www.thetrustisyou.com. Better yet, set up a free 30-minute tax breakthrough session with me. I'll find out how you file single, head of household, married filing separately, or married filing jointly. I'll find out, you tell me the numbers. I'm going to show you how much you're going to save in federal income taxes. We're going to look up your state to find out for state income taxes, and I'll send you an email with all the information. It's your timeline to figure out when you want to get this started. The earlier you get started, the more you save every single year. Unfortunately, I cannot go backwards. I can only go forwards. This Spendthrift Trust is legal. It's in IRS Tax Code 643B. The Benson Financial Trust is 78 years old. Not a single trust has ever been audited. Now Paul Benson's grandson and great-grandson run the law firm, and they promise if you get questioned by the IRS, they're going to defend you free of charge. You've got nothing to lose but to learn the secret of the rich. Have a beautiful day and watch some hockey. Take care. Wow, 4-0.